about the behavioral aspect of investing, I'm very much intrigued by the name of your firm, because money and ethics. And generally, what we believe that ethics is somewhat related with money, right? If you want a good amount of money, at some point in time, you need to compromise with ethics. So, how did you come up with the name Money and Ethics for your firm? So, any story behind this?
I would not say that I saw the movie 1992. Scam 1992. See, deficit trust has been something which has been in deficit for I don't know so many centuries. But even I don't know even last era also, the trust was always in deficit. So the idea was because I have worked. Uh, what I've seen in the real world is that people are very short-sighted. They have very short-term goals. Whenever they are looking at any relationship, be it with anybody, be it with their friend, be it with their spouse, be it with their clients, they are very short-sighted. They are very short-term goals that I want to get associated for this thing. So, and when somebody is associating with you for a longer period, then entire perspective changes. So the idea was to, because to my mind, sales people are something, sales, when we talk about sales, or what comes to our mind first is somebody pushing hard to us, a product or anything. To my mind, sales is to help the client in buying what he really needs. He might even not be aware about those things. This is what sales is all about. So money ethics is trying to bridge up this gap.
All right. So, how wide the gap is? Money and ethics, no? Because we assume that the gap is very wide. So it's a good attempt, I must say, but let's hope the gap bridges soon. So now, Puneet, I would like to understand from you that as we discussed in the opening comment also, that investing, whenever you think and talk of investing, we assume that it is a financial decision. You need to do some calculations. Maybe if you are investing in equity, there are many parameters people look for, like you can say EPS, or price to book value, past trends, and technical analysis. And then you put your money into any particular fund, or you can say asset. So, but nobody talks about the behavioral aspect of investing. So we assume that behavior is something different and investment is something different. So how do you relate in behavior also to the investment, and why it is relevant as far as investment is concerned?
So I understand this is a less talked about. Uh, Famous investor Benjamin Graham said that investor biggest enemy is their own behavior. Mr. Peter Lynch, who has been one of the most famous investors of all time, his fund delivered 29% CAGR for 14 years. But the investor got 7%. 29% by the fund, but 7% the investor got. So people were shocked about this thing. Right? How come people are getting so less return? The answer lies in human behavior. So if you think of pendulum, it swings between extreme greed to extreme fear. It rarely stands there, either to the extreme or to the extreme right or to the extreme left. So you look at 2003 to 7, Indian economy was booming. So, but somewhere like 2006, people just stopped looking at prices. They forgot the word risk. Because what is conventional wisdom? Conventional wisdom is to buy things at a lower price. Right? So when do we queue up in malls, showrooms to buy watches, footwear, clothes? When there is an ongoing sale. This is what exactly opposite happens in any investing, be it equities, real estate, or gold. Suppose you have 10 gram of gold. The price currently today is say 50,000. If this 50,000 will go down to say 25,000, people will start talking about that this will go to 10,000. And the same 10 gram of gold, if the price goes up to say 1 lakh, people will start talking about this will go to 2 lakh. See how the perception changes with the prices. If prices are lower, people will feel that this will continue like this. If the prices are higher, people think that this will keep on going higher, which doesn't happen. Nothing goes to the sky nor to the ground. It stays in between, right? So this is why behavior aspect is more important, because we generally buy we generally invest when things go up. We don't look at them, or we don't, even if somebody had told you buy real estate in 2019-20, nobody would have even cared about this. That who buys real estate?
कहावत है ना हमारे की, उगते सूरज को ही लोग सलाम करते हैं, जब प्राइस ऊपर जा रही होती है उसी को सलाम करते हैं, उसी वक्त देख जाओ.
बट इस उगते सूरज को सलाम करने का बहुत बड़ा प्राइस पे करता है. वो प्राइस हम आज तक पे करते हैं 29 और 7 के, हम 29 की जगह 7 ही.
So, Puneet, I would like to understand what is this appropriate investing behavior. Now everybody knows what is COVID appropriate behavior. So what is investing appropriate behavior?
Okay. So there are 3 things which we can do to eliminate these human behavior biases. First, what we can do is start maintaining a journal. Start writing it down. For what purpose, or why am I buying this? What is the logic behind this investment? Suppose if I need to make an investment in a real estate or in equities, be it direct equities or mutual fund, what should I ask? Why am I buying this in first place? What is the logic why I am buying this particular stock or mutual fund or real estate? I should know. Because if I write it down that I am buying because my friends are buying, I will not buy this.
But generally we buy because we just want that it will go up, and it doesn't go up for reason. Generally people don't put any goal, right? Why am I buying? Because though it is right that ideally it should be the way, but generally if we see what happens on the ground, then we always buy in anticipation of price going up and then reaping the gain. So if price goes southwards, then again you wanna बेचो.
So for this, what we need to do is that we need to assign a goal to every investment that we make. Suppose, so my daughter is 2 years old. So if I would be needing money, say 15 years after, so what I'll do is I'll write it down that I am making this investment for my daughter's education. Suppose the market falls by say 50% 2 years after. So then I can go back to that goal that I still have 13 long years. The market will go down say 50% in say 2024. But I will be needing this money in 2037. So I still have 13 long years with me. So if that is the perspective, then it would not bother me. वो एक कहावत थी 3 dates में ना, all is fair, सब कुछ सही है मामू.
Things are easier said than done.
So that is why. But there is a bigger prize if we manage our behavior well. We can get those returns.
I got one point that the first thing you talked about managing your behavior is writing down the purpose for which you are putting it in, right? Whatever asset class it is. So that is one way. What is the next? Will this only work like if I write it down, or there are certain, because what I understand is most of the time when we say it's inappropriate buying or investing behavior, we mean only the two things, buying and selling, because there's nothing affects. So buying and selling are the two things that affects any portfolio. Yeah. So first thing is fine, I've written it down. Now second thing is what I have come across when I speak to friends and people generally at night, this habit of watching constantly, looking at your portfolio, right? It gives kick at times, right? When the things are going fine. But when things are not going fine, then it again puts up a stress, and then a decision is triggered. So, what should be the ideal frequency at which I should be regularly monitoring my portfolio, if not daily?
Uh, so frequency is something which depends on everybody's his own needs or his own behavior. So suppose if there is somebody who wants a very high return.
Everybody, not some. I would say everybody.
So we want this, but we rarely have the stomach to digest the volatility. Because it cannot be possible that I want a very, very high return without having any volatility whatsoever. That is not possible. So I should first ask me whether I will be able to digest that volatility or not. Because easier said than done, roller coaster ride is not for it. So ideally frequency can be a year for a person who doesn't want to be involved very actively. Otherwise, it can be like 3 months. And you need to assign a benchmark also. Otherwise, how would I come to know whether I'm doing well or not? There has to be a benchmark.
Assigning benchmark meaning?
Suppose I know that, suppose if somebody says that real estate should give me 12%. So that is the benchmark for me. That whether the investment that I have made is closer to that particular benchmark that I had set in the beginning.
All right.
And while managing greed and fear is important, one more thing which is very important is to save. Save. 1 multiplied by 0 would always be 0. If I am saving very less, I cannot expect this money to grow at a I cannot expect that my retirement life would be very great because I am getting 20% a year. But what if I'm saving very less? So saving is also important. Earning return on that investment, both things are important. Not only managing your greed and fear, but also saving more. Because this maintaining journal, assigning a goal will help you in sticking with the investment. But what if I'm investing very less?
To me, it's human psychology. That
I don't know whether Ramesh
is best understood by way of a story. So, can you share some instances? You've been advising HNIs and other clients. So, can you share certain instances where you found that this client showed inappropriate behavior and he made this decision? And there were certain clients who made such kind of a decision, and perhaps those were appropriate. So, can you please share certain instances, picking up from your career so far? Has it ever happened that HNI also made bad decisions? We assume that they have all the knowledge and the money, so perhaps their decision is generally a thoughtful decision. And at times, what we have seen, many retail investors follow them also. Right? If an HNI is putting money or investing in a particular asset class, we also blindly do that. So, can you share a few instances of where you found somebody messed up with their decision and somebody perhaps did well but not taking even a decision?
March 2020, the market fell by almost 40% from top peak to but what happened? Who were the buyers? The buyers were the promoter of the companies, because they were not making investment. They were buying a piece of the business. They were interested in buying assets. They were not only looking at the prices. So March 2020, there were clients who had put in money. And you see, last year when the market was really going up at a very high pace, I received a call from one of my clients. He said that I want to put in money in equities for a month's time. I would be needing this money in a month's time. Even I don't know, Abhimanyu didn't know how to exit, right? How to come out. Even Arjun couldn't have done this in 2 minutes. But this my client wanted to put in money, make some quick buck, come out in 1 month.
So your client sees you as a Dronacharya.
That's what I'm saying. Even Arjun will not be able to do so. So it's like managing your own behavior. It is not possible. We would have to accept our limitation. So this happens every cycle. So March 2008, 2008 fall, who were buying? Exporters. So whenever you see a sharp bear market, or when promoters are the investors who are really buying.
They're gaining the
Either
control of the business.
correct. Either the price is good or the news. We want both of them to be good. We want everything to be normal and the prices to be wrong. Doesn't happen in this world.
So that was an appropriate behavior by the promoters. I think you're
Not the promoters but by the investor.
yes, promoter was the investor in those times.
See, March 2020, buyers were promoters of the listed companies. Right? They were buying their shares because they knew the value of their company. So they have full control on greed and fear because they know what they are buying. So generally what happens is we fall for narratives. Interest rate was low some time back. People were of an opinion that interest rate will never rise. And things are reversing. I don't know whether this would reverse or not.
Don't know what interest rate, but inflation is rising.
Correct. But people generally extrapolate short-term trends. They have a recency bias that they see the recent event, see them that this is happening, this would keep on happening in the future. So they are extrapolating. They are extrapolating whatever they are seeing currently. If I'm in a bad mood, I think that these things will go worse. If I'm in a good mood, I would feel that things would go to the sky.
So next question to you, Puneet, here is that we have been talking about investing and behavior in context of equity. So is behavior relevant only for equities, or if you are also investing into instruments like debt or bonds, so your behavior is important there also, because generally those are passive investments. So even if that's what I understand, so behavior is not of so much concern there. So what is your opinion?
Behavior is important in every asset class that you can think of. Any asset class that you can think of. If crypto prices go up, people will queue up again. Then I need to buy.
You uttered
People
the
will
word
rush in.
crypto. I would say you uttered the word crypto, and all of a sudden excitement level.
And you talk about gold, you talk about real estate. 2012, people were buying real estate on leverage, and leverage was also very high. Because they thought real estate prices can never go down. Why these sort of things happen is because we don't read cycles. We only look at last 5-year data, 10-year data. But we don't look at past data, how this has panned out in the past. 1989, Japanese market was roaring. It was like people thought that Japan would surpass even US. But we know the reality where it is. It hasn't come to those highs that we saw in 1989. It's been almost 32 long years that we haven't seen those highs that we made in 1989. So think of a person who is say 70, who saw the high in there is 30 when he was 38. 32 long years, he's still sitting with that asset with no appreciation. This is why we need to manage our behavior. We cannot fall for narrative. It's people's job or business to make us fall for the narrative. Somebody who wants to sell me a long dated product would wherein the returns are very low. He would say that returns in the future will be zero. I cannot fall for the narrative. I should go back in the history, whether this has happened in the history or not.
So by saying that don't fall for narrative, you mean to say don't read and don't watch.
I would not say that. I would not say that. What I will
So
say
narrative
is,
is set by these two media in general.
don't get swayed by the news flows. So what generally happens is, everything is in life is cyclical. It moves in cycles. Uh, Always look for conflicting ideas. Suppose I want to make an investment in a company, and I should also see what can go wrong. I should ask people who are negative on that particular investment. Because else what should happen is that my friend Ramesh has told me that this company is going to the sky, I should buy the stock, I shouldn't make those investment. I don't know whether Ramesh has any biased view on the company, whether Ramesh has any insight, or Ramesh has some insight that people doesn't know about the company, whether Ramesh has done his due diligence. I don't know. So I should look for conflicting ideas. Read wide set of data. Wide set of data.
But you know what happened later on? Ramesh come to Dala in it.
And then I'm okay.
This will also happen. That is why people
That's
follow
why-
that advices, no? That's how
That is why you need to manage your greed and fear.
yeah.
I'm okay. You made from 100 to 500. I am not okay with that investment. I'm not going to.
So you are a CFA qualified. So when we go through the syllabus or the content of these let's say coveted courses that talk about investment. So do they talk only about the mathematics and the logics, or they also speak about behavioral aspect of investing? Do they feel it is
Yes.
an important factor? And is it a part of the curriculum?
Yes, it is part of the curriculum. It covers the biases also. That what all, how human behavior affects our investment return. And there are, so it's not about the curriculum. It's an ongoing process. Learning is like we need food every day. We need motivation every day. We need to read every day.
We need money every day. In fact,
Correct. So we need these things every day. It's a learning process. Once I've read about something, it cannot be the case that I just stop there. Yes, I have read that in say 2012. I need to keep on reading things so that my understanding about that improves. Else, it might well be possible that you would be committing the same mistake that you had read in say 10 years back.
so reading is the key.
Reading is the key. Reading the right thing is the key. I guess.
So where can we get the right thing? That's the question.
That's what the experience tells you.
Any book you would like to recommend, or any journal, or any web, any portal that you think it is more credible as compared to the mass media, where information is just like talked about.
Okay. So first of all, I would start with the quote. There are old investors and there are gold investors. There are no old gold investors. राजस्थान में लोग बोलते हैं कि ये लोग सब जानता है, पुराने लोग हैं ना, तो कोई तेजी नहीं है, कोई मंदी नहीं, कितना भी बोल, कोई बात नहीं, रिटर्न बनेगा बहुत ज्यादा, कोई बात नहीं, अपने ठीक है. So और जो गोल्ड इन्वेस्टर्स हैं वो थोड़ा सा पैसा बना लेते हैं ना, they think that this will go to sky. And उसके बाद ना वो प्राइस कभी जिंदगी में वापस नहीं आता. फिर उसके बाद वो एक लेसन मिल लेने कॉपी में, ये नहीं करना, फिर वो कॉपी नहीं फेंक देते फिर अगली बार फिर याद।
बोर्ड की आप बात करें तो आपका मिनी क्रिप्टो वाला से तो नहीं क्योंकि बोर्ड में से भी वही
I don't know about that. I will not comment on crypto only, but this has been our mentality. This has been our behavior. So you can read people like, if you talk about Indian context, I think the best who has written about, rather I would say what I have read about this, late Mr. Parag Parikh. He has written a brilliant piece on this. Parag Parikh. You can read. Then Flame University's Professor Mr. Sanjay Bakshi. Sanjay Bakshi, yes. Then you can read from Fortuna Capital, Mr. Sanjay Bhattacharya. So there are so many people in Indian context who have written. You can find their videos on YouTube. You can follow them on Twitter. Then if you talk about the global context, you can read Mr. Howard Marks. Then you can read from the people like, say, Ray Dalio. He has written superb books on this. So there are many who have written brilliant piece on behavior finance or somehow related to this. The topic might not be start with behavior finance, but they are addressing the same issue. Because these are the guys, Ray Dalio talks about 500 years long cycle. So 500 long years. So basically he's trying to infer what has happened in the past. Let us go back to the history.
If there is saying history repeats itself.
And what Howard Marks says, history doesn't repeat itself, but it rhymes. It rhymes. It doesn't repeat itself. So we need to have inferences. We need to seek out inferences from the past. It cannot be possible that it would be replica or it would again mimic the past trend. But we need to go back to the history, understand. We need not mug up things. We just need to take inferences from there. What is the learning that we can take from this cycle? What is the learning? Why? So you can read from Ray Dalio. He is brilliant.
Thank you so much, Puneet, for talking such valuable things about the behavioral aspect of investing and suggesting the books that we can read. I think many of us are a good reader in our community. So thank you so much for suggesting. So now I would like